Macro Worldwide here. This is Gabe. It's good to see all y'all after so long. Zoom out a little bit.
Hello. Okay, I found it. Sorry. Sorry about that. I was have no idea why I couldn't find it, but I found it now. I want to go over some stuff with y'all that's happened. Some things have happened over the last few sessions here, and we're.
Good evening, everyone. This is Gabe with Macro Worldwide, coming to you live on March 1st, 2020. I'm here back in my home in Texas. It's been a long time since I've seen you. I hope to get back on the road again soon. I have a new plan for Macro Worldwide, and I hope that you'll follow me along this journey. But let's get to the pressing news of the week, the month, and that is COVID-19, the coronavirus, as it's called. This coronavirus has ravaged the city of Wuhan in China, and consequently has ravaged global markets, fearing supply chain shocks, economic slowdown, and even the loss of human capital. Global markets have had a severe reaction to this news, as you can see here on the chart of the Dow. It's pretty funny. It's not funny, it is insane. The magnitude of the move down on the Dow, supposed to be the shining star of stability, right? In a crazy world, right? The Dow Jones Industrial Average has corrected. Let me see for you. Dow Jones Industrial Average over the span of 10 days, about 7 sessions, corrected 16%. Okay, so, the mainstream media likes to call this 10% move a correction, and not a bear market. Are we in a bear market? I don't think so. We seem to be in a bull market. If we zoom out a little bit to the daily chart, we better zoom out further. If we zoom out back to 2017, you can see a very long, upward sloping trend line here. Okay, now we have lost this trend line, theoretically, from the recent day's move, but, a short-lived spout of volatility is very common in such a robust bull market as we have in the stock market, and we certainly could see something similar to this move that happened back in November of 2018. Let's see if I can give you the red lips right here. Okay. This move right here. Very sharp move down and a sort of V-shaped recovery, as we like to call it. Okay, so, it's not uncommon to lose a trend line for a little while and to gain it back. If you look on the weekly chart, this is probably, see, so it's just one red candle closes below the chart, and after that it's straight green candles. Now, are we in for that right now? Time's gonna tell. But I'm remaining a little bit optimistic about the virus. Global infections are leveling off, okay? Now, when I say global, I mean including China, okay? They're leveling off. China has done a spectacular job in containing the virus. Truly, all credit has to be given to the Chinese Communist Party for exercising their power in a way that I believe saved a lot of lives. Certainly saved a lot of, sickness. Let's take a look at this chart right here. This is the time-based chart of COVID-19 cases. Here we see the orange line is the case rate in China. Okay, we see an S-shaped curve, right, where there's a hyperbolic move up, a stabilization, and then another, another move up with an exponentially decaying growth rate. Okay, so hopefully this continues to level off right here. That's what we're hoping for. And yeah, the reason why I'm optimistic is this, the decrease in the difference between these two lines. The green line being the number of recoveries in China, and again, the orange line being the number of cases. Okay, so as you see right here, right, the differential is about 6,000, okay, between cases and recoveries. Heading out another couple weeks, the differential spikes huge to 44,000 to 5,000, right, about a 9x difference, 900%, 800% difference in cases to recoveries. But here you can see a very quickly declining growth rate, okay? Whereas the growth rate of recoveries stays constant, okay? So if we could extrapolate this chart, right here, if you look on the right side of the screen, just trace this out, hopefully another month or two, and hopefully we see this recoveries line catching up to the case line. Okay, that's China. It's pretty impressive, what they've done. The concerning part, the reason why we're not out of the woods per se, is that yellow line down there. Yeah, this yellow line. Jeez. This yellow line is the number of cases outside of China, okay? And you can see, right, high growth rate in the beginning. Growth rate, is expanding here, right? On a logarithmic chart, a linear logarithmic chart, when converted to a non-logarithmic scale, is exponential. Okay, so you can hardly tell down here because the scale is messed up from the huge number of cases in China, but as time went on, the number of cases was growing more and more day by day. See, 780 to 896, that's 116 cases. 896 to 1K, that's 110 cases. 100 cases, 100 cases, 200 cases, 300 cases, 300 cases, 400 cases. Right? So the danger is that this ex-China case rate spikes. Okay. This week is going to be highly consequential. Okay, for what happens in the markets. I'm optimistic. It seems, and I'm not one of these China skeptics. There's a lot of people out there who they don't believe the Chinese data. They think the Chinese are trying to hide things from the world, hide things from their citizens. I don't really subscribe to that. I don't think. I just don't. Maybe I should be more skeptical. But if this continues in China, it's going to give me hope that the rest of the world can deal with it too. Let's pray. Okay, so now that we've covered the situation on the COVID-19 global case count, let's go back to the charts, okay, and see what's happened. Let's take an inventory. Let's get rid of my circle here. Let's see, we got one candle closing below this trend line. Now, see, this happened here as well, albeit much less significant decline. But one guideline we can kind of use here is if we have more than one bearish candle close below the trend line, maybe we should give a high probability that the trend line is lost. But until that happens, I'm going to be viewing this as an opportunity, okay? If you see how steep this is, how incredibly steep this is. Let's go to the daily, you can maybe tell better. Yeah, this is what a bull move to catch, right? Over the span of, say, 3 weeks, a lovely 4 weeks V-shaped recovery. We can even chart it out here, right? A month and a half. Okay, so who knows? We could see something similar. Let's project that out. Go from the bottom here, take it out about a month and a half. This is to mid-April. Wouldn't that be something? So let's do a little bit of a post-mortem here. Why this point? Why did it bounce here? You can always ask why. There's one theory, which is that the market needed to retrace past the October low. Okay, this candle right here. Okay. Boom. So this is the lowest point, right? A support level that was not tested, not taken out for about, let's see, how long did it last? Till about March 1st, right? From the beginning of October to March. So what is that, 5 months? Okay. Once it took out this level, as you can see, volatility increased. You can see this weird, almost a Darth Maul candle, but not quite. And then we finally get a green candle, right? So much different price action from how it was here, where it's just red, 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 red. So you got this long body on the bottom here. Here there's a small body, a little bit of small body. So this was a point of inflection, okay, to take out this low. And if you go and zoom in on where we're at right now, as I'm recording this, we are coming up against that level. Okay, I would expect this price point. I would expect this intersection to get tapped right here. Okay, this is what I call the point of maximum uncertainty. Okay, this is where, volatility should increase, and this is where basically people are going to make their decisions about whether this thing could go long, whether this thing could go short. And so I expect this to be an important point. It also happens to coincide, here's a little bit of a trick. Let's take it out. Let's take out this trend line to these wicks right here. Okay, just for fun. And let's bring it back a little bit to prove a point. Okay, this is now the New York Open. Okay, so I can guarantee you this is going to be probably the peak of volatility for the day. This is the decision moment. Okay. We don't need to look at this trend line. This is nothing. You can kind of see a descending triangle, which is a continuation pattern, right? But, continuation patterns are sometimes made to be broken. And I think we'll break it, honestly. I think the news over the weekend was not so severe. I think the prognosis did not decline for, say, the global economy and the global population. One indicator I really like here is the Bollinger Bands, as you can see. And part of the reason is I like this 20-period EMA, okay, that kind of defines the middle of the Bollinger Bands. You see it it's going to decrease down here. You can see it lining up with this zone quite nicely. Another important thing is this time right here where New York opens is also when Europe closes. Okay, so big volatility we can expect right here. So personally, that's where I'm going to be clearing out some of my options. Okay, right, so when volatility is spiking, option premia will inflate, and that's where I'm going to reduce some risk, right? Because I own put options, and I'm optimistic for this market breaking up. I don't think COVID-19 is going to wreck United States corporate earnings by 16% over the long term. Okay, that's kind of what a 16% correction would suggest, and I don't believe in that. Now, am I putting everything on this bet? No way. No way. Am I heavily invested with insurance? Yes. Okay? Let me be clear. This is bearish. This chart is bearish right now. Going long here is you know pretty. It goes against the chart, should I say? I believe it's bearish until we break and close above this 20 period EMA. Okay, this is on the 4-hour chart. Now, a weaker bullish sign is to close above the 20 EMA on the hourly, which we have. So one thing to watch for, okay, is going to be going into tomorrow's market open has the 20 EMA been respected overnight? Okay. Now, as we've seen before, as I said before, successive closes above or below technical levels build confidence in the market that these technical levels are acting as true support and resistance. Okay, so here, over the weekend, essentially, from session close to, to futures market open, this weekend we've had 1, 2, 3, 4 closes above the EMA and only 2 closes below, and only 1 red close below, which turned into a hammer. So recent price action is quite bullish. This is an indication that we're gonna get, we should get at least a test of this EMA, okay? A fairly bullish looking test. I mean, I expect another, maybe a little red candle here, okay? And then another green candle up here. Fairly sideways, honestly, until we get to market open tomorrow. And anyway, so say we get a breakout, okay? Now, this is going to be violent, okay? This is not a thing where you wait for confirmation, don't take any risk. This is risky, okay? But you have to be prepared. If you're gonna hop into a trade, you gotta be prepared, okay? So here's what I'm looking at. I'm looking at this volume well right here, okay? Price tends to move through volume wells fast, okay? Because the market has a historical indication that the price level is not seen as stable value for the market. Okay. Sorry about this. Okay, so the edge of the volume well is here. There's one here. Here's the point of control. And here's a volume well. So basically any break above this purple line should be longed to 26.1, I would say. It's fairly clear. It's fairly well defined. This is a solid nearly 400 point move in the Dow. Okay. Now, remember what we said before, there was a scenario where this thing goes V-shaped through the end of April. Okay, let's take the bottom here. Full recovery by the middle of April. This is the trend line, right? Now, remember what I said about the point of maximum uncertainty. This trend line itself is a huge target. I mean, it's a solid 2,000 points up. Let's take a draw. Take a draw on this. 1,700 points. Okay. I'm gonna be playing this on DOW futures. We're looking for companies like Apple, Boeing, and Walmart to recover. Okay, let's check out their charts. Everything's gonna look the same right now, by the way. But see some beautiful action here on Apple. Let's see. Here the low is 256.29. Here the low 256.37. So I mean, you know, it came down to test that December low, and it's got a nice rebound. So let's project out again here to, I'm thinking actually more like early April. It could be, this correction could be retraced. And the reason why I say that is because it came down faster this time. So higher volatility, right, should indicate that we could, if we're going to get a retrace, it's going to retrace faster. I don't, but not too much faster, because I am expecting volatility to get crushed a little bit here, right? I mean, this is panic. This was straight panic. You know, 70 cases in the United States, a country of 350 million people, and somehow the entire stock market is now 16% less valuable because there's 80 people with a tough virus. I mean, you know, I don't want to downplay the situation, but I mean, we have thousands and tens of thousands, hundreds of thousands of people living with extremely debilitating diseases. Cancer, for instance, is significantly more economically, you know, damaging than COVID-19. I understand this is an additive headwind to the rest of our diseases, but I mean, come on, 16%. Anyway, there's no limit to how crazy how crazy it can get, right? Especially not just because I say so, but nonetheless, this was a clear panic, and panic should get retraced a little bit, assuming the situation doesn't get worse, right? Because basically, panic indicates that people's expectations are increasingly negative. Okay, if the situation begins to actually improve a little bit, then people's expectations are going to need to be realigned to be less negative. Okay, in which case we should see at least a decrease in volatility, and perhaps we'll see a little bit of, you know, bargain hunting. Okay, so that's what we're hoping for. Let's look at targets on Apple real quick. Look for targets on the volume profile. You know, this is a big well right here. Okay, so, and basically you can look at the gaps. Price is gonna wanna fill these gaps, right? Because lots of people essentially didn't get to trade in these gaps, and so there's a lack of liquidity there, which means price should move through rapidly. Okay, tops and bottoms of gaps. I mean, I I think this bounce we've already gotten is pretty um it's relatively strong already. Okay, I don't expect this to just turn around and blast through this. I mean, we've seen some crazy stuff, so crazy stuff can continue to happen. But I'm expecting more something like this, right? Where where the growth rate kind of decreases a little bit. Let's bring you over here. Let's bring you over here. Okay, so yeah, maybe we get to this first level, right, 279, in a couple days. Maybe we get to it today and then retrace a bit and then continue on up to this level. Price is unpredictable, but you know, we can make a prediction about the chart pattern over the long term. Okay, this bull market doesn't die like this. Okay, I don't believe it does. I think this was a liquidation break, okay, where a bunch of poor structure here. Look at all these gaps. Gap, 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 gap. Okay, gaps, gaps. All that poor structure has been repaired. Okay. You know, yeah, I think by tomorrow, by the 2nd, whatever that is, yeah, that's tomorrow. We should see this level by tomorrow, I think. We're looking for a higher move up in Apple. Hello? Okay. Thanks. So that's my prediction. Yeah, long and strong, baby. Long and strong. I got some insurance. I'm not gonna hold a big futures position overnight. I'm probably gonna put a stink bid in there. You know, just see if I can grab something cheap. We should have some good volatility at the start of the London session here in about 4 hours, and let's try to take advantage of that. Other than that, thanks for tuning into this edition of Macro Worldwide. I'm your host, Gabe, and I'll talk to you soon.